Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. We have a lot to get to in this show,
We do.
Let's jump right in. We're going to do a simulation about should you sell or hold this stock, featuring a stock you're all going to know. And we're also going to take a look at how to spot the top ranked industry groups and the top rated stocks within those groups.
Okay, but first let's take a look at the market. On Friday, the European Central Bank hinted at more stimulus. So it looks like more quantitative easing out of Europe. And we had a change of trend this week.
Correct.
The market turned around. The NASDAQ and the S&P regained the 200-day lines. And so our market pulse changed to market in uptrend. But we still do have 6 distribution days on the NASDAQ and 6 on the S&P. We had a fresh stalling day on Friday. So that's a decent elevated count, so just be aware of that.
And in case you're wondering, those days remain on the count because we went from uptrend under pressure to confirmed uptrend rather than starting a whole new uptrend coming from marketing correction and then having a follow-through day.
Now, after some weak reports from retailers last week, including Nordstrom's, Dillard's, and Macy's, we had some good news this week. We had Walmart and Home Depot, who reported some solid same-store sales and earnings numbers, and some other retailers moved higher on better-than-expected earnings, including Foot Locker, Abercrombie, Hibbett Sports, Francesca Holdings, and Ross Dress for Less.
Right. Now, a lot of these retailers, Foot Locker is one example, the charts are pretty chopped up, so they're going to need some time to recover. And the retail, apparel, and shoes group, by the way, is ranked a very lowly 150 out of the 197 groups that IBD tracks. But within the retail sector, the online players are performing quite well, like Amazon. And that retail internet group was ranked number 4 among the 197 groups. So that shows you how you can have these wide swings within a sector.
Alphabet hit a new high, but there have not been a lot of new breakouts in the market. And this week there was some big news. The NYSE will join the NASDAQ in eliminating stop orders as the exchanges seek to deal with the ramifications of huge intraday swings.
That's right. Now, another newsworthy event was Square's IPO on Thursday, and it was known as a unicorn. No longer known as a unicorn because that's a private company that's worth at least $1 billion, has a valuation of over $1 billion. Snapchat and Uber are a couple of other examples. Now, Square provides an online payment system that makes it very easy for businesses, including small businesses, to quickly and more cheaply accept credit card payments without all the hassle of creating that merchant account, which takes time and a lot of documentation. Now, but the way that Square's initial offering ended up being priced shows you that there's some issues, some caution about the IPO market right now.
Okay, now the IPO market has picked up, but at a lower price. In October, 85% of IPOs priced below their original range. Now, Square has some challenges. Their CEO, Jack Dorsey, is the head not only of one, but 2 major companies, which could be challenging. He is, of course, back. He's the head of Twitter, the company that he helped co-found, and also Square could be challenging. Now, the company could be hit from increased competition also from PayPal, Android Pay, and Apple Pay.
That's right. Now, Disney is another company that's facing some competition. That's coming from Amazon, Netflix, and other services that are drawing customers away from cable TV onto these over-the-top services. But Disney has been doing pretty well with Hulu, which it owns with Fox and Comcast, and of course the Star Wars juggernaut doesn't hurt. And that's going to hit theaters on December 18th. It's called The Force Awakens. And not only is that expected to generate over $2 billion in worldwide box office, the merchandising alone could possibly hit $5 billion just next year.
That's a lot of moolah.
That's a lot of money.
A lot of moolah. Netflix is another name that had a great week. It rose 16% for the week, which is a fairly rapid ascent. So all in all, stocks are acting well. Disney is still in buying range. So be sure to look through the IBD stock lists for ideas.
It is time now for a round of would you sell or hold this stock? So play along at home. We're going to do a little simulation using Facebook as an example.
Now, a lot of you may be familiar with its run and what the chart looked like, but do you remember what was going on at the time with the breakouts and what the stock, when the stock reported earnings?
That's right. So let's take a look at the chart, and then we're going to come back a little bit later in the show and see how it all played out. The period we're looking at is January 24th, 2014. So it's just a few days before Facebook was going to report earnings on January 29th.
Now, if you just bought the stock, you're not sitting on a gain, and we like to have a cushion going into earnings because anything can happen. So in this case, you were not sitting on a gain.
Now, like Amy said, you may know the story, of course, about Facebook and know what happened next, but no cheating in this. The whole idea of this is to treat it like you are in the moment, and you just bought a few weeks earlier in this scenario, and now the breakout has essentially fizzled, and you're sitting on a small loss, and Facebook is about to report. So what's your next move?
Now, if you had bought Facebook back in July as it broke out of a double bottom base, you've got quite a nice little cushion. So maybe you're willing to hold on. It's a little trickier, though, if you're already down in your position and the stock you own is about to report earnings.
Right. So consider both scenarios and decide if you would sell or hold in this situation. Then we're going to come back a little bit later, and we're going to see how it all played out. Now, one of the keys to picking stocks is to look for the top names in the top-ranked industry group and to understand what trends are impacting those various industries. So today we're going to look at a feature that can help you do that.
The Industry Themes article appears every day in the paper, and it really can help investors follow the groups that are showing strength in the current market. In this feature, we also point out groups that might be weakening or falling out of favor.
That's right. Now, today we're going to look at examples from two different Industry Themes articles in two different industries. And let's start with the home builders. This is from November 4th, and one major trend it addresses is interest rates. And it notes that the Fed Chair, Janet Yellen, said that when they do start hiking the rates, they're going to do it gradually, and it will not, at least in her opinion, affect the housing market.
Now, in the article, Vincent Mao points out that housing reports for the month of September were not inspiring. New home sales tumbled 11.5% to an annual rate of 468,000, which badly missed views that were anticipated to be 549,000 units.
And Vince also takes a look at how the leading home builder stocks had been performing at that time. Now, this is a current look at IBD Stock Checkup, and it shows you the top 5 names in that group, and they've performed pretty well recently, and the group itself ranks number 10 among the 197 groups that IBD tracked.
Another one of our writers, Ed Carson, wrote an article about the housing market and did point out that tight supply, along with solid job growth and wage growth, should support home prices. Now, that's good for builders' profits margins, but it could be bad news for entry-level buyers. Now, LGI Homes focuses on entry-level homes. D.R. Horton and Lennar are expanding in the first-time market and move-up market as well.
Another thing the Industry Themes does, besides just talking about the industry trends and things like that and the stocks that are in there, it talks about the chart action of those top stocks in the group. And here's a look at D.R. Horton, which I also covered this week in an IBD Stock Analysis article and video. It reported well last week, and it recaptured that 10-week line. Now, like other home builders, it was essentially unfazed by this week's housing data that showed housing starts in October were down 11%, but building permits were up a little over 4%.
Now, another article written by Vincent Mao took a look at the top-rated stocks in the retail internet group that we're setting up. Now, Amazon, of course, is the 800-pound gorilla in the group, and it has helped the group's performance. Okay, Amazon's up about 15% in 20 days.
Not a bad run.
Yeah.
Now, Vince also notes how Amazon has been firing on all cylinders in both the online retail business, its core business, and its rapidly growing Amazon Web Services cloud business. Now, even though the company has been around a really long time at this point, it still continues to innovate and shake up both old and new industries that it's getting into. And it is, of course, now, you see the trucks on the 405 as we're driving around. It's aiming at the grocery stores as well, delivering groceries. And it's also rolling out Amazon restaurants to deliver food. Apparently, they have about 50 restaurants right now in this test phase in LA. I haven't tried it yet, but it's an interesting idea.
Try it. Let me know how it works out. In this article, Vince also mentions November 3rd in the article that eBay was nearing a buy point. So the stock broke out and it moved barely above the buy point and then it pulled back. Now, there were some negatives on the company that Vince mentioned in the article. This was eBay's first quarterly report since splitting PayPal into a separate company. And the company has been hurt by a strong dollar and its gross merchandise volume fell 2%. Also, earnings and sales slipped.
Right. Now that's just a quick look at how you can use the Industry Themes feature to identify and then learn more about these top names in the top ranked industry groups. And here's where you can also see the actual group rankings.
Now, each day in the paper, we have the rankings of all of the industry groups, and at a quick glance, you can see which groups are leading and which ones are lagging in the current market.
How would you like an edge that helps you pick winning stocks faster? An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you basis, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
So what did you decide? How are you going to handle Facebook going into earnings? First of all, let's talk about the overall market. Now, we were under pressure at the time. We had 7 distribution days, and since most stocks follow the overall trend, Facebook had also pulled back some.
Right, so the week before earnings were due, January 29th, 2014, Facebook pulled back and was a bit below the buy point in this most recent base. But it was still above the 10-week line, and volume was well below average, so it didn't look like the selling was particularly aggressive. And it was obviously much lower than the volume in these prior up weeks. So if you had bought in this most recent breakout, would you hold through earnings?
Okay, do you want my answer?
Sure.
Got my answer? Nope. Because the market was a little shaky here. We had elevated distribution days in the market, and you're sitting on a small loss. You combine all those things together, I would jettison and then buy Facebook back if it reported well. I've also heard Mike Webster and Charles Harris, the portfolio managers for Bill, who's the chairman and the founder of IBD, say that that's basically the way they would handle a stock also.
And nothing's set in stone. It really depends on different factors, your own personal risk
your level
tolerance,
of conviction.
Your level of conviction,
Okay.
absolutely. Now, another option in that scenario would be to sell a portion of your position that reduces your risk and reduces your exposure, but you'd still have, let's say 50% of your position. So if the stock does report well and takes off, you benefit from that. So again, this is a personal decision, and it depends on many different things, not the least of which is how much of your portfolio, how much of your money is in that one stock.
And where are you in the life cycle of a stock? You know, stocks have different life cycles, and Facebook was kind of a newer IPO, so it was younger in its run. You know, or you could really roll the dice, and you could have had all your money in it. That's a little bit more risky. Sure. So let's just say you bought Facebook out of the double bottom base back in July. Now, if that's the case, you would have been sitting on a pretty nice gain, as we mentioned before, so holding going into earnings really becomes a whole different ballgame.
So let's switch to the daily chart, and you can see what happened the following week in the lead up to the January 29th after the close report. So you're looking at January 29th, but it still hadn't reported. So 2 days earlier, Facebook had fallen below the 50-day line, but came back and closed above it. And it didn't quite trigger that 7% sell rule when it dropped that day, but it came very close. It fell about 5%, a little over 5%. So again, if this is really happening with your money on the line at this time, are you getting out or are you sitting
tight? Now, a positive here is that Facebook found support at the 50-day line, which was good to see. Volume and price action the day before Facebook reported were not positive, though. Volume rose 56% and the stock tumbled 3%, and it did close in the bottom of the range for the day.
And in the scenario where you bought on this breakout, you had a loss going into that earnings report. But if you bought back in July, you'd still have a gain of somewhere around 60% or so, depending on where you bought. So that gives you a lot more leeway. But you still want to have a defensive plan in place, even if you're sitting on that big gain. And maybe locking in some of those profits ahead of time is one option.
Hey, locking in some profits anytime can give you a little psychological boost. So if you are in a completely different place and you're sitting on a nice gain, that's completely different. The point is, you want to do this exercise with as many leaders as you can. Just go back in the past. Ask yourself honestly, sort of day by day, how you would have handled them.
Right. Now, Facebook did end up reporting well, and it bolted higher. It gapped up to close 14% higher for the day. So holding, of course, was the right decision, right?
Yep.
Well, in
Easy
hindsight,
to say,
of course it was in hindsight. But when you're sitting there waiting for it to happen, it's your money on the line.
It's totally different.
Very different situation. So it definitely could have gone either way. And that's why you really do need to have a plan that you can live with whichever way the stock goes.
That's right. And that is, you have to have a plan in the market. It really helps you out. That way you're not flying by the seat of your pants in the moment.
Or sweating it out every night.
Sweating it, absolutely.
Earnings.
And you want to be able to sleep at night. Now, Facebook showed the same kind of behavior in this most recent earnings cycle. It broke out ahead of earnings, and if you bought it out of that base, you wouldn't have been sitting on much, maybe like a 7% gain from the 96.59 buy point. And that's a little bit of a cushion. So again, are you holding, are you selling, or are you all in right before earnings?
Right. And this was Facebook on November 4th when it was set to report after the close. Again, if you're playing along with this in real time and it is your money on the line, think how important it is to have that plan in place. And again, it has to be something that you can live with. I go back to what Lee Tanner, who's the organizer of the Petaluma IBD Meetup Group, said on our show when we interviewed him, was that if he's really fretting, really worried about how this stock is going to report, he'll just get out because it's not worth the risk.
That's right. Now, Facebook gapped up November the 5th after reporting, although there was a little bit of stealth selling going into that breakout since the stock closed in sort of the mid to lower part of the range for the day. But on Friday the 13th, it took a rather nasty little pullback, although it did get support at the 21-day line. And then, of course, it did bounce a little bit from there.
Right. Then on Monday, it fell during the day, but it rebounded nicely to close at the top of the range. And note the volume. It was 70% above average. That tells you that some big investors were stepping in to buy. And also note how that support came in above the buy point. That's another positive sign.
So we hope you've enjoyed Would You Sell This Stock? It's a good exercise to do with some big winners to see how you might have handled them. We had a really great Level 2 workshop in LA. We had a lot of meetup leaders there that were fantastic. I also got some gifts. I want to thank Surfer Pat so much at the Level 2 workshop. He brought me this book. It's called Jesse Livermore, Boy Plunger. This is a new book. It's by Tom Rubathon. So Surfer Pat, thank you so much. That was very kind. And then Michael gave me this book. This is called Wall Street, A History by Charles Geist. And these are just two very, very wonderful books. You guys, thank you so much for these gifts. Very, very nice. So again, thank you both. Very, very nice of you to bring me gifts.
And that ties into the concept of being thankful. And so we want to wish you all a very happy Thanksgiving. And we will have a show on Saturday. It's going to be about Shark Tank,
Tank.
which we both enjoy quite a bit. We'll talk about how the concepts of Shark Tank and how they review entrepreneurs and their new businesses, how that applies to us as investors when we're trying to check out a stock.
It absolutely does.
Sure does.
Have a great Thanksgiving, everybody.
And we'll see you next week.